Okay, welcome back. 2 minutes to go for the pre-open session. My colleague Anuj has hopped across from the next door studios. Anuj, hi, new week. What are you watching?
Morning, Prashant. Morning, Sunny and Nigel. The last week with the big Qs, and after that, I think the market really goes into some kind of a holiday mood. So this week, in fact, there are a lot of events lined up. For starters, exit polls come out today evening. So in the last hour, the market will go in the event, and my sense is the markets normally go into exit polls with long positions. So you might have a good last hour rally today. The RBI monetary policy decision, of course, comes out on Wednesday. This time it's going to be keenly watched out for, considering what's happened globally. And of course, on Thursday, you have the expiry plus the actual outcome of the Gujarat results polls. So it's going to be a big week in that sense. The overall structure is buy on dips, not just in India, but globally as well. You saw in US how on such a hot jobs report, there was no other way to describe it. The market actually used that as an opportunity to buy and actually ended at the highest point of the day. So in that sense, that's positive. The only risk factor that I see is this big opening up in China leading to a big surge in commodity prices. So maybe IT outperforms once again. Banks underperform once again. That could be the theme. On the Nifty, the first resistance going by the options data, is major call writing from 18,700 to 800 is at 18,815 and at then 18,900, which is also the prevailing all-time high, 18,887. And of course, the first support level is 18,600 and 18,550. But as I said, maybe Nifty outperforms once again compared to the Bank Nifty. Even Reliance and a couple of other stocks may support. And the broader market, that outperformance which started last week was the first week of big outperformance of broader market. My sense is that would continue for this week and for this entire month of December as well.
All right, Anuj, and we had a flurry of results in the FIFA football. Who are you going with?
France. I mean, it's I think it will require superhuman effort to stop France. I think it looks like they're just continuing from 4 years back.
Yeah.
4 years back also, France was actually the top contender. And this year as well, despite no Pogba, even then, I think they're just too strong. I think Mbappe on his own was... Actually, Poland did quite well defensively.
They did quite well in the first half.
So I'm just assuming who is going to stop Mbappe, and I feel for England defenders on this weekend.
Okay, all right. Let's see how that goes. Thanks so much for that, Anuj. Well, let's get in Manoj Muralidharan. Hi, Manoj. Morning. Thanks so much for joining in. Tell us, what's your derivative strategies that you have for us?
Good morning, Nigel. Nigel, when we started this December series, the FAS were an optimistic 77%, at least on the long side. Now, the Friday session, we have seen some profit booking, and they have trimmed almost 10% of that. So we are almost at 67%. And needless to say, the Nifty and the Bank Nifty has shared almost 6 to 7% open interest. So we believe that with such a low VIX, the volatility index almost at 13.5%. We are seeing good amount of straddles being sold. A straddle is when you sell a call and put option of the same strike. So we're seeing that happening in the 18,700 strike. So that brings down to support of around 18,500. So necessarily Nifty is in a buy on dip, and the dip might qualify as an 18,500 to 550, where I guess it's much prudent to go long on plain vanilla call option, because when your VIX is down, the movement in the Nifty has to be quite precise. For the Bank Nifty, we believe there is call writing at upper levels, but something close to at least a 42,600 to 42,800 might be a better level to go long, and that goes back to the same resistance of 42,800 at the Bank Nifty.
Okay, and individual stocks, Manoj, what are you tracking?
Yes, stock-wise, we still like Tata Motors. I guess the stock has seen a good rollover from November to December. The weighted average is somewhere close to 426 to 428. So that's a level to go long. Keep a stop loss of 417, and the stock has a potential to almost go to 448 to 450. Tata Steel also qualify in this. We have seen actually excellent delivery-based buying that happened just 4 days before. So we believe 109 to 109.50 is a good level to go along with the stop loss 107. The stock has a potential of 114 in this series as well as a target.
Okay, all right, Manoj, thanks so much for stopping by and filling us in with those details. Well, let's focus on a momentumizer of the day. Well, the auto index was struggling on Friday. It ended with a cut-off closure around 1% or thereabouts. But there was one mid-cap, a smaller stock, 1,000 crores odd market capitalization from the broader markets. It's Ricoh Auto that did pretty well. Well, that stock ended higher. It ended at the 52-week high, in fact. And if you look at it from the March lows, well, the stock is up close to around 140%. But this up move that we saw in Friday, well, it was backed by solid volumes, both on the traded quantity, well, it was much higher than what we have seen in the 10-day average. Even delivery volumes were much higher. So good up move backed by good traded volumes as well as delivery. Well, I was looking at their financials as well, and they've been stuck in that vicinity of around 9% on the margins. I think one bet is that can the margins improve from here? The sales as it is have been improving on a quarterly basis. So can the margins break into double digits? For the time being, well, the stock moved with good momentum. So it made to the momentum list. Sonia.
Okay, momentumizer list. Let's do one thing. Let's move on and talk about some of these new age companies like Paytm, PB Fintech, Zomato. They've been on our radar after their lock-in period ended. Now, these stocks have seen heavy block deals, lots of hands changing, and a lot of these stocks have slipped as much as 20% in this period. Digant Haria, the co-founder of GreenEdge Wealth, who tracks the space very closely, joins in now to talk about that. Digant, good morning. I want to start with Paytm because at the analyst meet, the company was very confident about a very strong growth, achieving their EBITDA break-even target by September of 2023. So at this point, does the risk-reward look favorable for long-term investors?
Morning, Sonia. Thanks for having me here. See, these stocks have fallen around 70-75% from the lows. But, that does not necessarily make them cheap. The Paytm is still at, 35,000 crores market cap. And if you look at, they have two main businesses. One is the payments business. The other is the buy now, pay later or the lending business, where they originate loans. See, payments business, they have been trying very hard to monetize it. But they have to acknowledge the fact somewhere that, payments is something we all take for granted and we don't want to pay so much money. Globally, in the US or everywhere, people pay a lot for payments. But in India, we don't. We won't ever pay for a savings account or for, writing checks or anything. So we won't even pay for payments. So I think for Paytm, it's a very long journey even today. Whatever the analyst meet says, it looked like that in 2027, they would do 1,200 crores of profit. We are already at 35,000 crores market cap. So, we are still at 35 times. If these earnings come true, we are still at 35 times on FY27. We have monstrously profitable companies, like Bajaj Finance Trade, that's like 36, 37 times earnings. And, we have to buy Paytm to 27 times earnings. That to 4 years down the line, whether these things come true or not, it's not very clear today. So in my view, whatever confidence came out of the analyst meet, I think it's more of the same in the past. If you talk good things, but you don't disclose enough, and the numbers also, don't inspire too much confidence. So yeah, I think we retain negative view that we had during the IPO and all through these last 1 year.
Digant, hi, good morning. And the biggest difference, you talked about savings bank account, etc. There's no UPI, right? Or maybe there is some version of UPI elsewhere in the world, but at least here we have UPI. And the face of fintech before UPI and after UPI in India is completely different. There was paths to profitability, etc. But I think that one thing kind of really completely changed things around. I put out valuation comparisons, Digant. I don't know if you had a chance to look at them, or maybe, I don't know if you came across it. Compared to global peers, where are all these companies trading? We'll have these graphics up once again. So I looked at EV by sales 1 year forward, and specifically for names like Delivery and PB Fintech, valuations are now close to, for example, Delivery, I looked at two Chinese companies, two US companies, and in the case of PB Fintech, there's a company called Goosehead Insurance, which trades at about 6 times EV by sales, and Policy Bazaar is around there as well. Any thoughts on these names? And this comparison, is that one way to look at things? Digant, go on.
Yeah, Prashant, thanks. You pointed out a very right thing that, in India we have UPI. So see, the Indian government and regulators have kept all the basic services really, really low cost. Like, having a demat account is absolutely low cost. Traveling in public transport is low cost. Similarly, payments, we have UPI, which is owned by the government. So nobody can exploit this system to the extent that, a Visa or a MasterCard did around the world, and, especially in the developed countries. So I don't think that it's right to compare India and global companies, because the global companies, they make profits in the payments business itself. Paytm has to run the payments business and spend thousands of crores every year just to ensure that people are there on the platform. It has been trying since very long to cross-sell a lot of things to these crores of people on the platform, but they're hardly been able to do any cross sell. They are doing loans now. Loans is the easiest thing to cross sell because people will take money, right? They were talking about wealth tech and insure tech and all. I think nobody is buying wealth products from Paytm. So I think the monetization route for Paytm is still very long. We should not compare it with global peers because the regulatory structures in India are different. The opportunities to monetize in India are much, much lower. So I think it's still a tough job for Paytm, and see BNPL has started seeing burst all around the globe. When you lend to people whom banks are not willing to lend, you are going to see NPA cycles. In India, BNPL has just started. So India's NPA cycle will probably happen in the next 2 years or something. So the models are still untested. The only growing piece, the very growing piece of Paytm, it's an untested model. So I don't see why we should compare it with global peers. Global peers themselves have a long way to go down.
Okay, all right. Hi, Digant. Morning. I was listening to your comments about the company being valued at 35 times, even assuming a big profit. And you still believe that it's not looking interesting. At what multiple do you think it will look interesting, given that, assuming that they'll do 1,000 crores?
See, Nigel, it's very difficult to put this out because, the first is I would look at NASDAQ bottoming out. I think NASDAQ and these global peers are far away from bottoming out. Second is that, they have to really see a cycle. And then see these Paytms and all these new age companies have been built on extremely high fixed costs, because they never bothered about costs because money was easy. So Paytm will have probably 4,000 crores of fixed cost. So I'll wait for those profits to come. There's absolute cost to buy any of these companies at the current valuations. Yeah.
Sorry,
yes.
I'm so sorry. Actually, we are running out of time. I wanted to quickly squeeze in PB Fintech as well because it is, a big beneficiary of this whole online insurance distribution space. How does it look at this price?
Yeah, so PB Fintech is a great business model. They have got the business model really right. So, it's the stock where we would be the most optimistic, or we would try and look at it. At some point, we would like to buy it. Maybe 350 or 300 is the levels where we see that there is no further downside. This is a company which can break into profitability the fastest. I think this company can also look at, say, 800 to 1,000 crores of profit by 27.
Got it.
And then the company trades at like 20 times. So this is a more reasonable bet to keep an eye on.
All right, no to Paytm, maybe yes to PB Fintech, but lower, right? Around 300 or so. That's Digant with his thoughts on both these names. Well, Digant, thank you very much. Good speaking with you. Appreciate it. We had a bit of a scratchy line there. We'll fix it next time. Mitesh is back with us. Mitesh, your 9-10 calls?
Yeah, Prashant, I'll go with a buy on Grasim with a stop below 1800 for targets of 1865.
Okay, all right. Thanks very much for that. So that's Grasim, 1827 or so in the pre-open session. Sonia, persistent and focused?
Yes, in fact, a lot of stocks are now reacting to data points. Let's get them one by one. Persistent Systems is on our radar. JP Morgan actually downgraded Persistent Systems. Remember, our colleague Nimesh had highlighted Persistent in the standout brokerage report segment when JP Morgan upgraded the stock way back in October. Nimesh is joining in now. Nimesh, what's driving the downgrade this time around?
Hi, Sonia. So the key reason for the downgrade is the fact that the stock has rallied 31% in the last 2 months. That's been the key reason why they've downgraded the stock now to neutral from overweight. Now, JP Morgan believes that after the big run-up in the stock, that is 31%, the stock is now fairly valued at 32 times for 1 year forward price to earnings, and the fact that now the stock is trading at a premium to the global peers. So JP Morgan believes that while Q3 could be strong and that could be a bit of a catalyst, but if that doesn't turn out to be, then they do not see any further catalyst for the stock to drive further further re-rating from here. So that's been the key reason. Post their overweight 2 months back, the stock has rallied 31% versus the Nifty IT rallying just 12%. So there has been a big outperformance. And after that, and given that the valuations are now at peak, they've downgraded the stock to neutral from overweight with a target price of 4,100.
Okay, got that. And what about the standout brokerage of the day, Nimesh? What is that?
Well, so today's standout is on Volta. So interesting report from CLSA. They've upgraded the stock to outperform from sell, and they have a target price of 935. Now they believe post the big underperformance of the stock Y2D, most of the negatives are priced in. In fact, the underperformance of Voltas is largely because of two factors. Because of the competition in the AC market, they've lost market share, and there has been a loss of margins as well. Both looks like it's going to turn around. So in the medium term, the AC market should see a single-digit growth for the industry. And for the industry, overall, they believe that the margins will recover because the commodity prices have softened from here. So on both these reasons and the fact that the valuations are attractive, they've upgraded the stock to outperform now. At current levels, Voltas is trading at close to 37 times FY24 price to earning, which is at a 7-year medium. So hence, they've outperformed they've upgraded the stock to outperform now with a target price of 935 in Voltas.
All right, there is Persistent and Voltas in focus. Nimesh, thanks very much for that. Mahindra and Mahindra Financial Services, let's revisit that. Abhishek is back. Abhishek.
Well, Prashant, to begin with, they have given the November business update wherein the disbursements are at 4,500 crore, a decline of 14.3% month on month, and the highest decline that you are seeing in last 7 quarters. However, collection efficiency have improved very sharply to about 96% when compared to 91% in the month of October. Gross NPA ratio has remained stable at the 7% mark when compared to October figure. However, it has increased from the September level of 6.7%. So analysts remain bullish on the stock. CLSA has a buy rating with a target price of 260 per share, and Morgan Stanley has an overweight rating with a target price of 275 per share. Back to you.
Okay, thanks a lot for that. We have just about 30 seconds left for the markets to open today, and it looks like it's going to be a green opening. The Nifty is up about 23 odd points. A lot of banks are looking good. In fact, ICICI Bank is one stock. Just keep it on your radar. The bank met with analysts and the commentary was positive. Ultratech Cement, after commissioning the clinker unit, is trending a tad bit in the green at the moment. So is JK Cement, and there you have it. Those are the first rates that are hitting the screen. The Nifty is up about 30 odd points. The mid-cap index is also doing a good job this morning, up almost 0.3%. And the bank Nifty is well in the green. I mean, just about thereabouts, about 0.2% or so. Couple of big gainers from the metal space this morning. Remember, China has eased their COVID curbs. So a lot of the positive ramifications are seen in the metal universe. I mean, this is a sentiment rub-off there. So whether it's JSW Steel, Tata Steel, Hindalco, the Nifty metal index is up about 1%. ICICI Bank, as I said, there's some positive commentary from the analyst meet that took place. So that's trending in the green right now. In fact, a lot of other banks are contributing, whether it's Punjab National Bank, Bank of Baroda, all looking good this morning. Kotak Mahindra Bank as well. And so is SBI, IndusInd, all in the green at the moment. The Nifty now has given up. It's just trending into the red line, and so is the Sensex. So you'd have to say it's largely a flat opening for the market. Nifty, Sensex and Bank Nifty are all absolutely flat at the moment. The mid-cap index is the only one that's trending a tad bit in the green, so do keep an eye out on that. A lot of individual stocks. By the way, the FMCG stocks are under a bit of pressure this morning. The FMCG index as well is trending in the red line, so do keep an eye out on that. But what else are you watching?
Well, Sonia, as we had said earlier today, you're expecting that gap up to get sold into. That's happened. So you're getting the bit of the intraday dip. I think it could get a little bit deeper, so keep an eye out on the headline index. Moving to stocks that are moving around, well, metal stocks in the broader markets are doing well. You have Nalco and Hindustan Copper. Both of them are up 2% apiece. Manappuram Finance as well is up close to 2.5%, and that's one of the biggest gainers in the F&O stock. So you just keep an eye out on that one. It's up close to around 3% as we speak, so good going out there. SJVN, they won an order, so that stock's opened with a gain of close to around 3%. Sanghi Industries, the promoter entity, is putting close to around 50 crores. Not a large quantum, but they're showing the faith at least for now. So, that one's opened up mildly in the green. Bajaj Hindustan, remember on Friday we had a BSE release that said that they've paid the entire overdues that were outstanding. So the stock was up 20% on Friday. And today as well, it's up close to around 15%. So keep an eye out on that name as well. So good going on some of these stocks. Some of them are doing pretty well. On the flip side, though, from the F&O list, well, a few stocks are under some pressure. TVS Motors has lost close to around 1.5% as we speak. Prashant, what else?
Well, broader markets, let's just take a quick look. So 3:1, by the way, in terms of advances. Not quite 3:1, but there, almost there. Hindalco is starting 2.25% higher. It, by the way, is the top volume traded name right now. Bajaj Hindustan is up 14%. So that is starting up with volumes. There is SJVN, Satluj Jal Nigam, which is up, 6%. Stocks at about 41, 42. Manappuram starts about 3% higher. So that's interesting. 123 on Manappuram. Of course, the bigger underperformer out of the two pure gold financiers is Muthoot. MTAR Tech, I mentioned this was a big move of 7-8% on Friday, and MTAR is starting about 3.5% higher right now. JK Tyre is up 3% at about 209. And there is Cochin Shipyard, which is up 2% right now. Kalyan Jewelers was another name which surged on Friday, last 2 hours, and that is starting another 3%, 3.5% higher. Skipper Limited, that is, I think, a transmission distribution a company, equipment maker basically. Skipper is up, what, to 12.5%. It was limit up on Friday. So that is starting at 122. And the other one we mentioned as part of our top 10 is Iron Exchange. Iron Exchange starts 5% higher at about 29.25. It doesn't usually show volumes, but it is this morning. So just mentioning a few of these names as we start. The recent new listing, hospital listing, Rainbow is down 3%. Rainbow is, and by the way, it's the largest volume traded name at about 740. Najib.
There's a large trade that's taken place. Prashant, and I'd quiz the management as well about have they heard from CDC? CDC had closure on 5% stake, and British International Investment.
Right.
Well, they as well had a large chunk. So closure around 15% is held by these entities. We have to wait for a confirmation, but the numbers are matching. So let's see whether or not that was a bit of an overhang on the stock. It'll be interesting to see who are the buyers as well, because 15% equity out there. Rainbow Hospitals, well, we'll try to get in the management and try to confirm who exactly was part of this deal. But there's 15% equity that's changed hands, and the largest entity is out there.
I think it's almost a 1,200 crore kind of block which has happened. It's coming up with very large volumes straight out of the gates. So possible, is what you're saying. Raymond is the other one, by the way, which is starting down about 3.5%. This moved up 7-8% on Friday. So that's the other one on the downside, which one is picking up.
Just also want to mention these tire stocks. This news flow actually came out on Friday during market hours, but a lot of the reaction is also taking place today. The NCLAT has set aside that almost 1,800 crore penalty imposed by the CCI on tire companies. So since that has been set aside, this was the investigation regarding cartelization. And, the tire stocks, JK Tires, are all looking pretty good. That is Prime Minister Narendra Modi. He will be casting his vote very shortly, so he's on his way, and that's some live visuals coming in there of Prime Minister Modi.
All right. Politics is a big week for politics. I mean, there's voting, and of course, the second phase of voting, and then, of course, there are results later this week on Thursday. The state election results for Gujarat. All right, Gautam Trivedi is with us, co-founder and managing partner at Napian Capital. He's joining us right now to take some questions. Gautam, good to have you with us here. Thank you very much. I mean, from the last time that we spoke, markets have moved on, made new highs. Even in the US now, price action is pretty stunning, especially what happened on Friday. The data came in very strong, and markets just kind of moved on. Reversed all of those, all of that pressure. So what's the market telling us, Gautam, and what's the takeaway from here? Those are, by the way, Gautam, just coming to you, those are visuals of Prime Minister Modi on his way to cast his vote, and it's going to be interesting to see. It's a three-way fight, by the way, in Gujarat now this time. There is, of course, the BJP, the incumbent BJP. There is, of course, the Congress. But the third and the new entrant is the Aam Aadmi Party, which of course, also has made its presence felt, perhaps more in rural areas, etc., on the plank of education, etc. But, BJP is, of course, the favorite to kind of win this one as well. So it'll be interesting to kind of track this. As Anuj also pointed out, I think we get exit poll results later this evening, and, of course, results later this week on Thursday. Gautam, morning again. Sorry, go on. What's price action, just pure price action telling us? More to go from here?
Yeah, here's the thing. The way I see it is if you look at the month of November, and if you look at MSCI Asia ex Japan, it saw a 17% rally. It's the second highest in the history that you've seen a single month rally of as much as 17%. Of course, a lot of that was propelled by $8.5 billion of foreign buying into China. And I think that's what I find as a bit of a concern for our market, given the fact that money invariably ends up flowing from higher valuations to valuations which are more attractive. We are still 100%, 130% at a 130% premium to MSCI China. So I think that risk clearly remains for the Indian market. From a foreign institutional buying perspective, domestic is a separate story. So I think you saw that rally in the month of November, and I think the rally will continue given how compelling valuations are. And I think we've seen a lot of empirical evidence out there that over the last 30 years, you really haven't made much money in China. But having said that, if you look at the number of times foreigners or even locals for that matter in China, in the rest of Asia, have made money from the trough to the peak, I think that is really what needs to be kept in mind, and valuations are very compelling at this point. In fact, Korea, if you look for as another example, foreign ownership is at a 15-year low. So clearly a very compelling case from foreign institutional investors to look at other markets in Asia, not just India. So that's something to keep in mind.
Gautam, I thought 6-year-olds were buying stocks in Korea. If you remember, during that frenzy in 2020, 2021, remember those stories? I mean, a 7-year-old makes $1 million.
Yeah.
It's just, but that's interesting. And that's the point.
Prashant,
sorry, yeah, go on.
Yeah, but what I guess the other thing which clearly is also in some sort of a frenzy year, I mean, more than half the investors now in the Indian market, given the proliferation of demat accounts, have gone up 3x in the last 2.5 years. More than half of the investors now are new. So in some sense, there might be a 7-year lurking who's playing the market. But seriously, it's gotten to a point where I was at a funeral and I was approached by 2 people separately asking me my view on the market. And I said, can we focus on why we are here, and let's not talk about the market and give respect to the person who's deceased.
Oh dear.
So I think there's a bit of a frenzy here too.
Unfortunately, it's only not my 7-year-old.
Making all the money.
There is some 7-year-old.
Some 7-year-old in Korea making so much money. You're wishing it would be yours, right? Okay. Someday that'll happen. But Gautam, hi, good morning. What about back home? I mean, I think that the entire rally started on the 24th of November when the US Fed came out and said that they're going slow on rate hikes and they're, fight against inflation, they're taming inflation and all of that. But do you think a lot of it now is in the price, or is there more to go? And if yes, what are the big themes that you're looking at in the Indian markets now?
Sure. So, here's the way to look at the Indian market. If I look at the absolute amount year to date invested in the Indian market, so FIs are a negative $17 billion. Domestic mutual funds are a positive $33 billion. And if I look at the NSE data that comes out on retail participation in the market, we're roughly about 8 or 8.5 billion of retail year to date net. These are all net numbers. So if you add that up, you get about $22 billion of net flows into the Indian equity markets, counting everybody who's participating in it. Now, if you think about it, for a country which has a market cap of $3.3 trillion, all it takes is $22 billion, which is, not even, I guess, mathematically, not even 0.5%, to actually keep the market up in local currency terms as much as 6%. Now, think about it. If another $5 billion inflows or outflows were to come into this market, again, keeping in mind that our total market cap is as big as 3.3 trillion, 4th largest in the world, another $5 billion inflows or outflows could have a significant market impact. So I think that's really what is going on. While foreigners may have come back marginally, I see more of that money going into North Asia. And as far as domestics are concerned, I was looking at the Angel One numbers which came out, and I follow them every month. They put out these statistics. They are clearly seeing a month-on-month and a year-on-year slowdown in volumes. So, I think as rates continue to rise, and we'll see another rate hike potentially this week from the RBI, as rates continue to rise, I'm getting increasingly asked questions about what's a good fixed income product to put money into. So I think some of that at the margin, I'm not saying everybody's going to do that, at the margin will start to happen, which could to some extent slow down the domestic flows.
Hi, Gautam. Morning. When we chatted last, Gautam, you were sounding a little bit skittish that maybe the lows of this year, they could be revisited at some point of time. 2023 could be a challenging year, actually, because earnings could get pulled back a little bit, and valuation-wise, we're not cheap, as we've been discussing. What's your view now? Those lows that we saw in the middle of 2022, they'll hold up, that 15,000, 15,500 odd, and we will not revisit those levels?
Yeah, that's a good question. And the fact is, I still stand by the fact that we are in the middle of a bear market rally. We're not out of the woods. The other thing, of course, is if you look at the Bloomberg consensus for world GDP growth, it's down from, this year, estimates are 2.9%, and next year, 2023 calendar, are anywhere from 1.8 to 2%. So clearly a slowdown. The question really is, how deep does the recession in the US and Europe get to? And nobody has an answer to that. Now, if you look at the MSCI All-Country World Index, the United States accounts for 61% in terms of weightage. So that will drag down the rest of the world if a recession were to get deep. I hope it doesn't happen, and I hope it's a shallow one. And of course, to some extent, we get insulated if it's a shallow one. But the reality is that I do see the market trading sideways, maybe even going down by about 7 to 8% if the US recession were to get real.
You know, I do want to ask you your views on certain sectors. So, for example, the auto sector, right? I mean, in the month of November, the numbers have looked very good, whether it's names like M&M or even something like an Ashok Leyland, which has seen an over 50% growth in the medium and heavy commercial vehicle segment. Do you think this is a space where there is still more headroom, both from a valuation as well as a growth perspective for investors?
I think there is. The one thing that I must caution all investors is the fact that heading into 2023, which is going to be a very uncertain year, I think valuation protection is really your friend in this market. So as a result of that, I would say that if you look at the two-wheelers, for example, the Bajaj Auto and Hero, they're both around 15 times FY24 PE. You know, downside's fairly limited. Even Maruti is not that bad actually, 24, 25 times. And Ashok Leyland's at about 19 times. So I think these valuation numbers aren't really aggressive for the automobile sector. Might be a good place to stay invested. Having said that, I think the passenger car segment, and unfortunately Maruti is really the only way to play it, is very robust in terms of demand, especially the premium and luxury segment.
Yeah, no, that segment is doing very well. Just a few specific movers. Go Colors, if you can put this up. That is down 3.5% on volumes, mind you, very large volumes. Oh, sorry. Okay, fair enough. That's so 1152 on Go Colors, and the other one, of course, is Rainbow, as we discussed earlier. Zomato is down 2%, 67 on Zomato, and Persistent. We highlighted that, as part of the standout report, which is down 2% or so. Angel One, Sonia was talking about, that is down about 3.5% as well. On the upside, it is Policy Bazaar, which once again is up some 3%. Any thoughts, Gautam? Policy Bazaar. Actually, specifically Policy Bazaar, Delivery, and Zomato, if you like anything here.
You know, I would stay away from these names for the time being, because I think there's more selling pressure that's still coming into these stocks. So they may have had a bit of a rebound, and I wish them well. But the reality is, if I can buy a Facebook or Meta at 15 times 23 earnings, that company's got an operating cash flow of $45 billion. Now, Indians have the ability to buy shares in the US, so you can open an account with any of these discount brokerages and do that. I'd rather put my money there than actually put money into any of these who are still far away from even breaking even on EBITDA.
Okay, all right. We'll leave it at that, Gautam. Thanks a lot for joining in, and have a great day, a good week ahead as well. If we don't speak to you again, I mean, it's the end of the year, so Happy New Year to you and your team at Nepean Capital. Hopefully the next year will be better than this one.
Wishing all of you the same. Thank you, Sonia.
Thanks a lot for joining in on the channel. But we were just talking about the auto sector and the fact that it's been strong sales across the board. We have M&M that's joining us now. The company reported good sales in November in both auto and tractor segments. Auto sales were up 45% year on year, while tractor sales are up in double digits. The management says that tractor demand continued to remain strong in the post-festival period on account of a brisk sowing of the Rabi crops. Rajesh Jejurikar, who's the Executive Director of the Auto and the Farm sector at Mahindra & Mahindra, joins us now. Rajesh, hi, good morning, and thanks a lot for joining in. Good to see you on the channel. In the UV segment, the utility vehicle segment, year on year, the growth is looking very strong. But on a month-on-month basis, there's a bit of a dip, a 6% dip, despite the very strong order backlog. Just trying to understand, what is the order backlog now post the festive season, and any specific reason for this month-on-month dip?
Sonia, thanks for having me on the show, and it's a pleasure to be here as always. I just want to wish all of you on the channel, I believe it's you're celebrating 23 years of
Yes.
CNBC, and that's an amazing run that you all have had. So compliments and congratulations to all of you on that.
Thank you. Thank you so much, Rajesh. And thank you for being a part of a large part of our journey as well over the last many years.
Yeah, now to your specific question, yeah, we had a slight dip from October to November, and that is because semiconductors in some of our vehicles still continue to be a little short, and we did have a shortage on a specific product, which has impacted us in the month of November, and we may have some of that in the month of December as well. But, you know, as we've said, while we have an installed capacity of a certain level, semiconductors may cause a plus minus 10% depending on what is getting impacted. You know, in our newer products, as we've said, like XUV700, we have more than 220 chips that we need to be getting, and any one of these not coming in could impact output. So, and we've had a slight dip, but we think a volume of more than 30,000 for the kind of price points we play in is a very significant volume, and we've crossed 30,000 now 3 months in a row and continue to be number one in our SUV market share. So yes, a slight dip compared to in November compared to October. It's still a very, very strong run, doing more than 30,000 a month of SUVs.
So there was a 39 to 40,000 production guidance by the end of FY23. Do you stand by that, and are the supply side challenges completely resolved now?
Yeah, so like I said, you know, these are capacities that we are setting up for. There could be specific issues related to semiconductor or the availability of a specific part at any time through, you know, the end of 2022 or even going to 2023. Supply uncertainty continues. As you know, China is following, they're easing it a little bit, but a zero COVID tolerance policy, and that does lead to lockdowns. It does lead to disruption on some of the parts, which especially the electronics or the semiconductors. So we would expect to see disruptions along the way in 2023, but nothing like what we saw in 2021.
All right, Mr. Jejukar, hi, good morning. Prashant here. And this is true for the industry, I'm assuming, as well,
Hi,
right?
Prashant.
You know, last you were on, you
Yes,
said...
it is. It is true for the industry, yeah.
You'd said that you expect about a 5% year-on-year growth for the industry. Is that, would you stick with that?
You're talking about tractors now, right, Prashant?
Yes, tractors.
Very clear. Yeah, so we have said a little over 5%, and we'll stay with that. So November was better than what we had expected, and let's wait and watch how that goes. We actually had a very robust November sales in tractors, growing our domestic volumes by 11%. We gained 2% market share, and hence cumulative on the tractor side, we are actually a 0.9% market share gain, which on our level of volume is a very substantial gain. So we continue to do well with a very strong product offering on the Mahindra tractors and the Swaraj tractors both. The Yuvo Tech, which we had launched a few months back, is doing very well and helping us gain market share.
Sorry, 0.9% gain market share in tractors and over...
0.9. 0.9 cumulative.
Yes. Over what period, sir?
Yeah. That's April to November.
Okay.
That's this financial year YTD, and 2% share gain in the month of November itself.
Okay, that's on the tractor side. So you're saying you stick to your 5% plus guidance for FY23, right, in terms of growth for the industry. Okay, got that. I wanted to come back...
Yeah, we'd say a little above 5, so it could be in the range of 5 to 6.
5 to 6,
Yeah.
okay. I wanted to come back to the SUV space because, you know, these new RD norms, which is the real drive emission norms, are kicking off very soon, I think from the month of April. I want to understand what is the price hike that you'll have to take for diesel SUVs, and what would that do to demand? I mean, do you think demand could get hit in any way?
We will make this transition through Jan and Feb. We are ready to make the transition, and it will start happening in a phased manner as we get into January. The increase that we believe we have by way of cost for the change to the RD norms is much lesser than what many people are talking about, and we expect to be in the cost range in the range of maybe like 10 to 16, 17,000 depending on the models. We don't think that for the kind of price points we play in, this is going to be a very significant impact or will have any impact on the demand. There are people we are hearing talking about much higher in cost increases, but we think we have a good cost increase, and we'll be able to pass this on.
Okay, you'll be able to pass it on. The reason I ask is because, it is quite the run rate has been very strong across the board. The total auto sales that you've seen, I think in the month of November, has crossed 58,300, and you spoke about how SUV sales were over 30,000. Is that a run rate that you can maintain over the next couple of months as well?
We don't give a guidance, Sonia, but you've seen the way we are setting up capacities and preparing ourselves for the future. We believe that with the product portfolio that we have, we will see a very strong demand momentum. And except for some very significant setback on the macroeconomic front, we expect the current demand momentum to continue.
Good morning, Mr. Jejurikar. Well, you're talking about your product offerings quite a few times, so let's get straight to that. In January, you're going to be launching the XUV 400, I think. Could you tell us what is the capacity that you'll have as of now, and any ballpark numbers, any targets that you'll have?
Yeah, we will start bookings towards the end of for XUV 400, which is our electric offering that we'll bring out. It'll be our first real electric SUV offering, and we'll start bookings towards the end of January and start delivery soon after that. We haven't yet declared or said what we're going to target. Let's wait and watch what kind of bookings we get. We'll be starting the test drives later in the month of December. Like we've said, we would like to get customer feedback as we get into the test drive. The initial feedback on the launch has been extremely strong by way of everything that we've heard digitally on social media as well as through our dealer networks. But we would look forward to enabling a significant growth in the category there. As we've said earlier, the penetration of electric in the B segment SUVs and the C segment SUVs is extremely low.
Okay.
In the region of 2 to 3%, or in the C segment even lesser. So we would prepare ourselves for enabling a growth in the electric penetration in the category.
Yes.
The XUV 400 is a very strong offering. It is a 4.2 meter product, so it gives very good space and very good boot space as well. So it also has a very good range, excellent acceleration. So it's a very strong product offering. As we get closer to deciding on the pricing, we'll work out on the volumes.
So we'll wait for pricing and targets, Mr. Jejurikar, but what is the capacity?
Sure. Well, the product has a lot of, it will be made on the same line as the XUV 300.
Okay.
Because it's, has carryover parts with 300. So from a manufacturing capacity, as we put out, collectively combined between the 300 and 400, we'll be setting up for over 9,000 capacity for both of these together. Of course, one has to wait and watch what happens in the China supply chain, because that's an important part of the supply chain and Korea into what will go into making of the electric 400. But from a manufacturing capacity point of view, it's fungible with 300, and that's over 9,000.
Okay, you do know that Nigel's asking this from a personal consumer standpoint, right? He's very interested in, and he doesn't have to wait too long.
No, actually, I didn't know that, Nigel.
No.
So
I assure you, Mr. Jejurikar, I'm going to be taking that test drive, but I don't know whether it converts into a sale ultimately, but I'll definitely give you my feedback personally.
And it's you're not telling us the price, Mr. Jejurikar.
Yeah, and we'd love to get that, Nigel, but I can tell you, if you test drive it, you will book it.
Look at the confidence. Is it in that 17 lakh price band? I know you're not giving us the price, but am I on the right track?
Sonia, you're good at asking these questions, which is fishing for information, but no, you'll have to just wait a little bit.
Okay, all right.
That's a crucial factor for me, so I'll have to wait by.
I think the fun part is the wait, right? When the launch happens and then the test drive and then sort of you take it forward.
The difficult part is coming up with the money.
But just a couple of final questions then. Overall, in terms of, demand trends, you spoke about how the demand is shaping up and the new launches. Any kind of headwinds on the margin front? Because we have seen the last time around as well, we spoke about this possibility of premiumization. how people are now upgrading to premium cars. And you did mention that there is a possibility of the margin profile for the company in the auto segment moving higher. What's the expectation there?
We have seen a significant improvement in our margin over the last 3-4 quarters on the auto side. It was in the region of 3.6% towards Q3 of the last year, and it's moved up to over 6% right now. This has happened through operating leverage, cost reductions, some of the products which were launched earlier, getting out of the the initial booking price which we had held on to. We have seen a significant improvement in our margin, and there is a lot of focus on driving costs down as we go forward. So let's say we are so far delivering on what we had said would be the margin outlook for the business.
Okay, all right, Mr. Jejukar, we'll leave it at that. Thanks a lot for joining in, and all the best with that new launch coming up. Expected to be in the month of January, so don't have to wait too long if you are an auto enthusiast. But there's a significant improvement that they've seen both in terms of volumes as well as in terms of margins. But they stick by to their guidance of 5% plus growth, 5 to 6% in the tractor segment for the industry. Let's slip into a quick break. On the other side, we have the management of Bajaj Electricals joining in, Anuj Podar, to talk